Okay, so today actually marks the final day of the bootcamp because I thought it wise. There's no need of us having a question and answer session tomorrow, and we can as well just uh, make them one. Like we can just combine them. Okay, so today being the final day, we are going to tackle trade and risk management, and trade management is one of the key, or rather, one of the sensitive topics that one has to master in trading, than risk management. Because I usually say that where you exit the trade is actually more important than where you enter. Because you can have a bad exit, then maybe you lose all the money. Yeah, so your exit in a trade actually is way much more better than where you enter. So today, actually, we've since the bootcamp started, that was on Sunday. So sorry for the noise in my background. Since the bootcamp started, that was on Sunday. Until today, actually, we've come from far because it's around how many days? 5 or 6? Five, yeah, 5. And we've been very, very consistent. No delays in time. All presentations done well and very, very detailed. All of them have been documented in our Telegram gallery. So everything is in order since we started. And I can't hesitate to thank God because that is out of my control. Yeah, because during this week actually, since even before we started the bootcamp, I was very, very unwell. Not very, but I was kind of unwell, and I was like, why is this unwellness coming between my my sessions, my bootcamp? And I'm one religious guy. Let me not say religious. I'm one who believes in God because I'm a Christian, and obviously I had to pray, and I prayed for God to guide us through the bootcamp. Actually, I prayed for my student to have a brain of understanding. Yeah, because me as a mentor I can even teach, and it just you guys don't understand. And I know God has always answered my prayers, and He did so in this. Since you can see, He has guided us from the beginning actually to the end. So we have to say thank you as we wind up today. So today we'll be handling trade and risk management. And as you have seen, we've handled everything. That is from building trade ideas. Okay. So idea generation, and under idea generation, we started from market structure because I told you guys that market structure is actually the foundation of this system. So we learned market structure, we learned institutional supply and demand. We talked about MTF phases. Under MTF phases and institutional supply and demand is where we talked about voice selections, right? And we talked about under market structure, we talked about trend and order flow and all that. Then under supply and demand and market phases for day three, was it day three or yeah, for day three is where we talked about voice selection criteria, and we talked about a number of voice selections because the strict minimum and the others. Okay, then we talked about entry models yesterday and liquidity. So we came from idea generation to entry models, and today we are on trade and risk management. Now tell me, what have we not covered? We've covered everything actually. Or maybe someone might say we've not talked about psychology. Yeah, we'll maybe talk about them because in the markets, truth be told, it's always you against you. It's you against your fear. It's you against your impatience. It's you against your greed. Yeah, it's you versus you in the markets. Okay, so maybe we'll have a session. When can we have that? Yeah, but I'll arrange on a psychology session, and I will just talk about because fear is one of the actually the most part of psychology that really really that really really brings problems to most of the traders. Yeah, because I know psychology is why traders are always like, I have problems with psychology. Then when you ask them, which part of psychology do you have a problem? Some will be like, I have fear of execution, I have fear of holding trades, I have fear of I have greed. Yeah, so we can talk all about that someday, just one session, then it will be good. Yeah, so fear is one huge thing. We have fear of missing a trade, that is a formal. We have fear of execution. Okay, we have fear of losing. You know, you can't take a trade because you fear you're likely to lose and to lose money. So fear is huge. We have fear of maybe even holding trades. So fear is huge. But before we go to that part of psychology, let's wind up today with trade and risk management. Okay, so I'm very happy because most of you have done well from what you guys are sending me, the assignments I was giving you through, and I'm pleased. Yeah, I'm pleased. So just keep practicing because something like market structure, structural mapping, you have to practice. If you see me sending weekly pre-market breakdown, that is on Sundays, what do you have to do? You also have to do the same, and make sure that your markups are the same as mine from the daily time frame to the higher time frame. Maybe they might be different on the H4, but always try to be the same on the daily and the and the higher time frame. If at all you have difficulties, that's when you can ask, why did I map this on this way and this way? Okay. So practice more on entry models. Build as many entry models as possible. Okay. Have your objective, know the price narrative. Then you'll be able to trade very very well. Like I've said, we come from idea generation. We've come from idea generation. We've talked about entry models. And we're currently talking about trade and risk management. So under trade and risk management, actually, again, like I actually say, nothing is complicated in trading. Okay, this technical part in trading, actually, if you are a quick learner or somebody who really wants to trade that bad, you should learn technicals under 3 months. Okay, because now what is that? Since we started from market structure, we went to institutional supply and demand, we went to market phases, we went to intermodals. Now tell me, is anything hard? Nothing. Nothing is hard. Most of you usually just complicate stuff. Nothing is really really hard. Yeah. So the technical part in trading is very simple, and you can actually uh, do it quick. Then maybe you can remain in the psychological part. For psychology part, you live with it. It will take time because we are humans. We are not robots. Emotions have to be there. Once money is involved, emotions have to kick in. However, how much money you have, emotions will always be there, right? Yeah, something like hesitations and fears, you can beat those with time. Not 1 year, not 6 months. It can take you 2 years, it can take you 3, 4, 5, 6, 10. Yeah, it will depend with how quick you adapt. Yeah. So the technical part, leave for me. I'll make sure you master it very, very quick. But now for the psychological part, I'll just give you the theory part. But now I want to be there with you on charts, right? For the technical parts, if I tell you that now, give me an entry model, print out that, mark the liquidation and the PBL and the leg inducement, you can perfectly do that. And if you have a mistake, I can perfectly point it out and you can correct, right? But I want to know if you have a challenge with your psychology. I want to know that now here, this guy had fear of execution here. This guy was hesitating here. This guy had fear of missing out and he did this. I want to know. I'll just tell you that to avoid fear of missing out, do this and this. To avoid fear of execution, do this and this, right? Yeah. So from trade management, we'll start from trade management, then we continue the risk management. Like I said yesterday, today will just be much of stories, then we go. So under trade management, it's upon you. Remember, you backtested the system, right? And now you want to build your conclusions on trade and risk management. You can have a fixed take profit based on RR, or you can have a fixed take profit based on number of pips, right? So maybe you can say, I have a fixed take profit. I can always have a target of 1 to 6, and you don't have active management. Or you can say, I'll have a target of 1 to 6, and I'll trail my SL at B at this point, which at that point also can be a fixed RR, or it can be based on structure. So you guys, you've always seen my trades. Let's talk of my trades on targets. I always have a fixed RR target of 6, right? And I do have an active trade management. What do I mean? I don't usually leave my trades to run to TP once they're triggered. I usually stay with them until the final outcome. What do? I have a fixed RR target, that is 6R. Once price breaks the first structure, we'll maybe check those on the live chats later. Once price breaks the first structure, I usually go break even. So you can see I trail a sell to break even once price breaks the first structure. Okay, just a minute. Then I've introduced the partial staking system. Yeah, so that's how basically I do manage a trade. So some can also trail the sales above as they take profit. Me, I have the partial staking, right? Some guys will always trail their stop loss just 1R below price. Let me say they're buying. So some guys, let me say you bought at this point. So someone will take either sell from here, bring it there until price gets to take profit. So different people have different trade managements. The end goal is, did you make money or not, right? Yeah. So you can choose to do it like I do. I've said you can have a fixed take profit based on RR. You can have a fixed take profit based on key levels. Key levels are things like structure, so or maybe liquidity, right? So instead of targeting my fixed RR like 6, you like I'm coming from an M15 demand zone from the discounted levels. I'll target the week swing. You can see that. Yeah. So you target key levels, liquidity zones. Yeah. So one can also do that. And for trailing a sell, some will just trail a sell behind structural highs and lows. Yeah. So that is the first on trade management. So you can see how simple trade management is, right? It's not complicated. The thing that you have to be aware of is how you exit the trade. Exiting the trade doesn't mean that it has to hit your take profit, okay? A trade hitting your stop loss, that's an exit. It's an exit. It has hit your stop loss. You've exited the trade, okay? So trade hitting your TP is also an exit. So, and I've said you exiting a trade is much more important than your entry. Yeah. Don't make your SL so huge and your take profit less. These Instagram gurus, they usually have they don't actually they usually trade maybe even 0.2 to 1. Yeah, you find someone is having like 100 pips a sale, then once price goes to
Move
profits
to
like 20 pips, he's out.
AFK.
Now this guy actually was risking much more than what he was actually targeting. Yeah, so another thing, don't make blues entice you that once you're out of a drawdown, because you know most trades will always go to a drawdown. Yeah, you must always see some reds in your trade before it goes to profits. So once you're out of a drawdown, once you see profits, you close. Yeah, that's the part of psychology. You can't hold on to trades. You're very impatient. You just want to see blues and close. So you have to be very, very disciplined with the rules. If you have a fixed RR, have that way. Break even level, have it that way. Partials level, or how you will be trailing your sale, have it how you place it down on your trading plan. So basically, that's all on trade management. We'll check them on charts so I can explain it better. Under risk management, actually, nothing much to. Uh, I actually advise traders that try as much as you can to manage your risk consistently. Okay, for you to manage your risk consistently, try again as much as you can to stick to the good trades, because taking bad trades is where we'll bring inconsistency in risk management. Are you guys really, really getting what I'm trying to say? Let me say, in this trade, this trade over here, trade A, it's a high probability trade. You hesitate, you risk 0.1%. Trade 2 was a low probability trade. Because you won trade 1, now you think that this trade 2 will be okay. You risk 1%, you lose. So in trade 1, you risk 0.1%. In trade 2, you've risked 1%, you've lost. Trade 1 hit TP with 0.1. Meaning even if it hits TP, let me say it's 5R, you shall have made around 0.5%, right, of your account. When that 1% negative comes, you are again down, which shouldn't be the case. So the first thing for you to manage your risk consistently, try as much as you can to only, okay, you can have as many end models, as many trade ideas as you can, but not all trade ideas are to be executed. Okay, execute those that are in line with your trading plan. I actually call them the A plus setup. So if you have A plus setups, obviously you have the B setups, right? Yeah, those that have a little of hicks, but they should work out. So you just know how to balance between these trades, but try and risk consistently. Let me say you're risking 0.5%, risk 0.5% across all your trades, so that when the general results come, you are up. Okay, note that all the trades that hit TP, you risk 0.5%. All the trades that went to a sell, you are risking 2%. Obviously, you want to be on the profitable side. Yeah, so that is one key thing that most traders don't know, and is one thing that you guys must know. Try as much as you can to take the good trades, then try as much as you can to have a consistent risk. Okay? Yeah. So under risk management again, that's why we have things like you're risking like a percentage of your account. So obviously it's always a percentage of your account. For those guys having good accounts, something like $10. Now what do you want me to tell you to risk on that account? Actually, you shouldn't be trading $10. Of course, when I was starting forex, I had such accounts. I had a $10 account. Obviously, you'll below. Yeah. So if you have a $10 account, or actually if you are trying to enter the market with a $10, I advise you not to, because obviously I know how it will end. A $10 account, I know how it will end. So the best thing you can do with a $10, you can go buy mandazi. Yeah, with a $10, you can go buy mandazi. Then at least it will end well. At least you won't lose. At least you won't lose. Yeah. So for $100, maybe you can. For account like $100, I can't advise you again to risk 1%. Now for $100, you can risk like 10%, 5%. Okay, so like you can say that for every trade, I'm risking like 10% of the account. That's $10. That's okay. Then now you can start risk management from $1,000 account. Because if you risk 10% on every trade, sorry, not 10%. Let me say you risk 1 to 2% of $1,000 account, meaning per trade you're risking $10 to $20. If you have a 6R target, you fluctuate each TP with a $20 risk. That is $120, right? You have good return. Yeah, so don't have these small accounts. There's no need of practicing with them. Practice the demo. And I told you guys that don't take much time on demo. Demo is just to teach you how to open trades, close, open limits, close, set limits and set stops, set a sell, learn how to take partials. That's the work of a demo account, right? But a demo can't save you on anything. Take it from me. Actually, for me, I never traded demo. Yeah, because okay, I'll give you a bit of my story, but before we go there, demo trading, only use it for what I've told you. Learn to set limits and stops. Learn to set a sell and TPs. Learn to take partials. That's the work of a demo. It's done. From that point, you can start depositing your 50, 100. Start managing your emotions from there. Because on demo, you won't learn anything. On demo, you won't learn anything. You won't learn anything uh, as much as psychology is concerned. Yeah, so let nobody lie to you that trade demo for months. Don't. You're wasting time. Yeah, find that $100 below, learn. Find that another 100, that 50, that 200. That's how you manage your emotions quick than demo. Demo, you shouldn't take more than 2 weeks on it. Once you've learned the basics on how to use the MT4, MT5, or whichever the terminal you're using to execute, it's okay. Start funding. Okay? Start funding. Yeah. So I was saying you risk a percentage of your total account balance. That is and I don't don't usually advise for a risk above 1% per trade. Okay, don't risk above 1% per trade. Yeah, then try and risk consistently. Then when you're scaling in, try as much as you can, because you know you can have a trade idea. Then more re-entries come in line with the trade, right? So make sure that when you're scaling in is actually you have the first entry, right? Then as the trade runs, it gives the second re-entry, and you want to enter. Then it goes again, it gives the third. So what you do, make sure that when you're scaling in, you scale in when the previous trade is already running risk-free. Okay? Don't scale in and the previous trades are also still at risk. Because let me say you're risking 1%, meaning all these scale ins, you have to risk 1%, right? Yeah, so make sure the previous 1% is risk free, the next 1% is risk free, like that while you're scaling in. Okay? Yeah, don't try to flip accounts. I've tried, I have so many massive flips and I've blown huge money. Yeah, just be disciplined, look for good money and trade. We have props, right? Yeah. So that is it. Then have a maximum daily loss. I don't want to talk of profits. You can make money as much as you can. Target even $1 million in a day, but have a maximum daily loss. Okay, have a maximum daily loss, but target anything. Target $1 million in a day, but have a maximum daily loss. Okay, then make sure you have something called a maximum total open risk. Let me say a trade is running, and you maybe have scale-ins. You can have a rule that you have, okay. You know when you have a scale-in. Let me now delete this. Let's go to charts. Let me say you took this sales. Somewhere there. Let's say slightly above, let's say 5.5 pips. You're targeting around your fixed target, let's say 6R, right? 6R. You have a risk on that trade around $50, meaning when that trade sits TP without partials, you should have made $300, right? Yeah. So you want to do scaling. The first trade has been triggered. You're going break even, meaning it's risk free. You have the next zone over here. You want to make a re-entry. So what you can do to yourself, you can say, obviously you have to have the same target, okay? What you can say, I know I might have scale ins along the way. So in this trade, I'll risk 0.5%, okay? Then if scale ins come in, I'll risk 0.25. Then if another one comes in, I'll risk 0.25. What am I trying to say? This is when you've said that now my total open risk per trade, because this is one trade plus all these scale ins, should be 1%, okay? It will depend on the percentage you want to risk per trade. Yeah. So if you have 1% risk per trade, you divide it that way. Let me say you have a maximum daily loss. Let me say per day, you only want to risk let's say around not zero. Let's say 2% of your account, right? Let's say 2% of your account. And you know you're trading the Frankfurt, that is pre-London. You're trading the London, because you know London goes like for East African time. London goes the entire day, right? Yeah, because London starts right now before we start April. London starts at 11 and it closes at 7 p.m. So that's like the entire day. New York will come inside. That's when we'll have the London New York overlap, right? Yeah. So when I say London, I mean the entire day, okay? And the pre-London. So you're like, in a day, I'm only risking 2% of this account. Let me say your 2% of the account is $200, right? Already more. Obviously, we'll have massive trade ideas, and I've said try and stick to the good trade ideas, okay? So what you do, you divide this risk. You say that, from my past data, I actually have high probability trades during the pre-London or during the first hours of London session open. You get me? So during those sessions, I'll risk 0.5% per trade, because I'm always likely to have around 2 trades. Meaning, pre-London to first hours of London session open before New York comes in, you have a 1% risk. Okay? Are you betting me? If you have these and your trades go well and hit take profit, you can be done for the day. Okay? Let me say you risk 0.1, 0.5% and 0.5% on the next, you had a negative 1% before New York kicks in. When New York kicks in, risk 0.5% per trade. Try and recover this one. Okay? Okay, let me say now you have a risk of maybe 1% per day. You just want to risk 1% of your account per day. Let me say this 1% is maybe $100. Okay, and you know very well you're trading the pre-London and the entire London, meaning the entire London you love the London New York overlap, right? What you do, you have 1% risk. You take 0.5%, you risk it on the session that you always have high probability trades. That is maybe pre-London or London. You risk 0.5. Okay, meaning you still have 0.5 floating that you have to risk. If this trade CTP, wait and trade. You can end your day or wait and trade this other 0.5%, because even if, let me say you're targeting 6, this will be 3% up, right? Even if you lose this, you'll just be down 0.5%, you'll be remaining in that, okay? If you lose this first one, you still have this one to risk. Okay, let me say you won, you still have this one. Coming in New York, you know very well that New York you usually have 2 to 3 setups. What you do, you divide your 0.5 into 2. The first trade during New York, London overlap, you risk 0.25. The next one you risk 0.25. Okay, that's how it works. if you want to have such a rule. Yeah, so what I've said, make sure you have a daily maximum loss. Make sure you have a daily maximum loss, and make sure you have a maximum total open risk per trade. You get me? Yeah, it's just that simple. Make your rules from what you've backtested, or rather what you've tested, or from just your data, and use them. I've given you the guidance on how to manage trades and how to manage risk. So let me maybe check on the trade I had today and try and explain to you what I'm trying to talk about. Let me say I'm a guy that risks only $100 per day. Okay, that's 1%, right? So I know very well that in a day I'm likely to have no trade totally, or I'll have around one, two, and maximum three trades. Okay, what I'll do, the first trade I'll risk 0.5. The next trade I'll risk 0.25, and the next one, that is the third one, I'll again risk 0.25, meaning I shall have hit my 1% daily risk. Okay, if I lose this one, I wait for the next one and risk this one. If I HTP over here, I shall have recovered this, and I still have another floating 0.25% to risk on the third. Okay, if I win this one, I'm up. I can choose to go off charts or just wait and risk these ones. Okay, but I would actually advise most that if you win the first, that you always have much risk than the others. Because let me say here I have a 1% daily maximum daily loss. I've won this one. It's okay, go make noise somewhere. This one, just leave them alone. You come back tomorrow. Okay, because you can win this one, you lose this and this. Yes, you'll be up, but I know the psychological pressure that will come with. I know. Let me say you risk 0.5% UHTP. You have $300, right? This one you hit a sell, you lose 25. This one again you hit a sell, you lose 25. Meaning you're over here, you're down $50. Right? Take away there, you're remaining with 250. So this is how I told you guys that having a consistent risk is key. Okay, it's very key. Very key. Divide it this way. Have a maximum daily loss, that is maximum daily risk. Don't bypass that rule. After that, divide your risk on how your trades are actually being presented, the probability on how they're actually being presented. From my side, I actually know that any trade presented pre-London or during the first hours of London session open, that is maybe 1 to 2 hours within London session, those trades are actually high probability. Any trade during New York is just noise to me, most of them. So most of my risk will be actually pre-London and maybe 1 hour into London. Anything during New York, either I'm not executing or I really have a small risk of 0.25. At the end of the day, I only played with around 1% or less, and I made money. Just that simple. No over risking, not trying to flip. You're very disciplined, very consistent. Money is entering. You have nothing much. You go make noise where we yeah. So you can see how this thing is simple. So the problem only comes when now we traders start over risking and being indisciplined. The first trade you risk much, maybe the entire 1%, you lose. FOMO kicks in, you know, hesitation kicks in. You get the next trade, a high probability one. Now you have declared your daily maximum loss. You don't know what to risk over there. So just be disciplined, have your rules, and do the right thing. Okay. So that is just all for both. For both. Are you guys all seeing my screen? If you're seeing my screen, may you confirm with the reaction? Yeah. So Collins, you can just check your network. It's always a network issue. So you can just leave the meeting and rejoin. Yeah, you leave the meeting and rejoin. Yeah. So any question? Any question under what we've discussed today? That is under trade and risk management. Yeah. So that we've talked about risk management. Very okay. So under trade management, just to illustrate on live charts. Uh-huh. So following my pair, I actually trade this pair nowadays, this pair and this pair alone. So uh, it was my first trade idea that was missed. Actually, I never counted this trade as missed because you can see this pullback even. Yeah, it wasn't just a good trade. Let's say that. Then there was my second trade. Actually, it was a DCE on the previously missed zone. And added confluence was that we had a new supply zone. So when I enter trade, the first thing I check, okay, let me say I have my zones, okay? I have my zones. Let me first bring it from. So obviously you can see the liquidation over there, right? Then the PBL over there. It has already failed. You have your entry zone, because I said you take that pivot, or rather the zone that you want to take. Okay, price is starting from this zone. So I took this zone as a smart money trap, because I wasn't expecting this zone to hold anything. I just want to use it as a delivery zone, okay? Because for price to tag you in, it must be delivered, or rather, it must be delivered from a zone. Yeah, so I took this as an SMT. Price got delivered. After being tagged, going risk free is the first structure break. Because remember, tag, that structure being broken. Not with wicks. There are cases where I take wicks and there are cases where I take body close. So with a body close, okay, you go risk free. Once you go risk free, obviously price shall have left a zone that you can have a re-entry. Okay. Remember our first entry is already risk free, first structure break. I also took this zone as an SMT because you can see if this zone was to hold, this zone actually had a leg inducement, right? Price from the leg inducement, meaning this zone was missed. So I took it as a smart money trap. The only zone that was giving me headaches was this one. Yeah, because it was an M3 zone and very high probability. Yeah, so again, you can see what happened. Price action this zone to validate the significance of the demand zone because obviously we have to see that orders are actually here, right? Yeah. So doing that zone failing. Then after this zone has failed, remember now this first re-entry over here is invalidated because if this re-entry was to be respected, then we could have just put back at this zone, then gone. You can take this as scaling. If you have a new structure below, avoid this scaling. Okay. Yeah. After that happening, price will obviously give you another scaling over here. But you have to know where price is coming from. You can see price mitigated this one and pushed up aggressively. Yeah. So that was how that trade was managed. And only partials were secured because I take partials at 3R. So once price gets to 3R, you take out some percentage. Yeah. So what I usually do, you can take half out. You can take half out, half of the trade run, half. Let me say you've risked $100 in this trade. Usually, if I have such a risk, if my trades hit perfect take profit, I usually have a profit of around 450. But if at all I wasn't having these partials, then the profit will be 600, okay? But with partials, the profit will remain for 50. Why? Remember, when price got from this zone to 3R, the floating profit was 300. If you take half out, you'll remain with 150 risk floating. Sorry, risk, yeah, running, right? Meaning you've taken 150 out, 150 risk is running again from here now to 6R. Are you guys understanding? Meaning if this 150 now hits 6R, it will be 300. 300 plus the one that you took out 150, it remains for 50. So personally, what I've got with this system, I know what my trades usually give, the outcome of every trade, and I know all my risks offered because my sales are usually just the same. Let me say, actually, I just know that if I have a 2 pips a sell, I should be having this lot size. If I have a 2.5, I should be having this lot size. If I have a 3 pips, I should be having this lot size. Because in rare cases, when my SL pips go above 6, yeah, so I know if I have a 4 pips a sell, my lot size should be this one. You enter the trade that way. So even if the trade is fast, I'll catch it at the right point. Yeah, so with the time, with experience, you'll get to where I am. And just try as much as you can. Surpass me. Me as your mentor, you do better than me. Yeah, I might not be doing much to my potential. You can do much more, way more better than me. Do win. Okay? Yeah, so wake up, do your part, pray to your God, everything will be fine. Trading is very simple. We as humans, being that you're not robots, we're the guys that complicate stuff. Yeah, so you remain disciplined and do the right thing. Yeah, so hello, can you recommend a position size calculator that caters for spreads? Or how do you manage to have a strict risk per trade with very SL sizes? So I don't usually have spreads. That is the first thing on my account because I'm using Exness zero spread account. And I actually just use the normal FX calculator from my Facebook. Yeah. Check this code under, is it trade management and risk management? You'll find a link for the calculator. But around tomorrow, I'll share a link for another calculator that has the spread whatever. Sorry, the spread incorporated. Okay. Yeah. So it takes the spread risk. Or the one I'll share tomorrow will be the one with commission. Yeah. So that, let me say you want risk 1%. Now it will incorporate the commission. Now you want risk 1%. Now you make the risk lower around 1.8. Sorry, around 0.8. So that 0.2 will be for the commission. You understand? Yeah. So after taking partials and then price reacts from a zone which might be an SMT and forms an entry model. At what point do you decide to close the remaining position and letting it return to B? After taking partials and then price reacts from a zone which might be an SMT and forms an entry model, at what point do you decide to close the remaining position and letting it return? Oh, I'm not letting it. Okay, what I usually do is very simple. Like that trade I was explaining to you guys yesterday. So if I told you in this trade, the only thing I did over here is that I never bothered to take to close this trade because I usually just close my trades once they get to around 5R and I see some rejections that are alarming. Because you can see at this point, price actually gave us a liquidation and a PBL failure. So actually guys entered at this buy to sell week. Okay. Yeah, the guys who entered over here and pushed and took us out. Okay. So I actually exit a trade. Let me say this trade came to around 5R. Let me say this trade was playing around here, this demand zone, and an entry model is presented. I just be patient until I see a valid entry model that way. Once I see that PBL failure, when price reverses, I'll take out my trade that zone like that before it goes that. So whatever will happen, I don't care because you realize that I take a 6R, price has already gone 5R plus. Whatever I'm holding here is less than what I risked. Can be around $20, 30. So why must I hesitate closing $30, or why must I hesitate leaving $30 on the table to and not secure the others? So I can easily leave these on the table to secure the one that already been given over here. Okay, because at the end of the day, the trade is still okay. Closing your trade at 5 and you're targeting 6 is still okay. Okay, yeah, and it's not a must. It's not guaranteed that your trade has to hit take profit. Yeah, my question will still remain: did you make money or not? Okay, you are targeting 20R. Fine. Did you make money, or you wanted to flex with the 20R? Yeah. So at the end of the day, make money. Yeah, it's not about our rights. It's about money. Okay, it's about money. Yeah, you'll find so poor traders or good traders from Western just targeting 2R, 3, making good money, and you'll find an African black boy targeting 20R making $5. So most of us don't know what to do actually. You know, yeah. So have a risk. Let me say you are risking. Let's just say you're risking. Now I want to talk from the Kenyan point of view, or rather East Africa. Okay, you have as low as $20 risk. Or let's say you have a $5,000 account. Okay, you want to risk $25. You want to take 2 trades, so your daily risk is $50. Okay, so let's say in a trade maybe you've just risked the entire $50. Meaning if this trade hits take profit, you'll have made $300, right? If this trade hits take profit with your 3 partials, I think you'll have around 225 if I'm not wrong. Is this not money? This is money, right? If you are to take 225 at take profit level and you see price floating at around 200 or 180, will you not close? You will, right? Yeah, so let's stop looking for perfection and let's make money. Let's stop looking for perfection and let's make money. You waiting for price to hit your take profit from being triggered to TP without closing any trade, any money is bullshit. Yeah, so make money as the trade runs. Okay, make money as the trade runs. If it reverses, well and good, you made money. You continue on to the next. It's just that simple. Just that simple. Just that simple. So one mistake that you should never do: don't try to flip unless you have your sources of capital, and make sure you manage risk. If you don't manage risk, you won't stay. You'll be isolated from the rest of us. Yeah, yeah. So don't be enticed with these Instagram guys that you see a guy has flipped $100 to maybe 10,000. We, I'm a, before around 2023, I used to share so much of my profits, and I saw it doesn't really add value to anyone. Yeah, it will just add pressure. It doesn't add value to any person. Yeah, so in whatever you do, make sure just try and add value. If you have a setup, just make it detailed. Label your liquidation, your PBL, your leg inducement, entry, before and after. That setup will help someone. You having 10,000 floating won't help someone. Actually, I don't even care if I see profits because I've made so much, you know. Yeah, so I'm one person that has flipped, I'm one person that has blown. Yeah, so what you have to know is that these flips that you see online, what you have to think is that these guys actually have blown like 100 or more than 100 accounts before they flip it to that level. So they'll only show you the wins, but you won't see the blown accounts. So one thing you have to know is that flips are sustainable. Because let me say you are risking, you want to flip $100 to maybe 1,000. That's a flip, right? For this flip to work and be posted on IG or TikTok, this account shall have been blown around 8 times. You understand? So you only see that one win that became this one. Okay? You only see this one. You won't be shown this other negative 800. Okay? Yeah. So personally, I don't sell any broker. I'm not a forex influencer. I don't influence any broker. So if you want to trade, you trade. I won't influence you to trade. But if you're into trading, make sure you're doing the right thing. Remain disciplined. Treat trading as a business. Yeah. You have your capital, right? That is your stock. Now sell and buy to make money. Okay? Yeah, when treating trading as a business, for every business, a business must have its house. Like it must have its shop, right? Yeah, so take your shop according to your stock level and your demand. I don't know if you guys will get what I'm trying to say. You know very well that you have a $5,000 account. Imagine there was a business. There's a good stock, right? Which rent will you keep this kind of stock? It shouldn't go beyond 15K, right? That is your house. Because for every business you must have the running fee, the running cost. So the running cost of this house or of this business shouldn't go above $300 per month, okay? Or maybe $400. Yeah. So that's how you treat trading as a business. What you could have done if it was a physical business, okay? Yeah. You take your house, maybe it's a normal 1 bedroom, around 15K. Obviously, you have your net and other bills. Maybe they'll total to around. So I'm talking in in Kenyan shillings. Sorry, I should be using dollars to cater for everyone. But anyway, the message is on. So, any other question? Any question before we end our today's session? So today actually marks the end of the bootcamp. Today actually marks the end of the bootcamp. We've done much, and like I was telling you guys, uh, we've come from far. We've come from far. Because starting from Sunday, I've been with you guys until today that we are ending the bootcamp. And the first thing that I said is that I have to thank my God, because if it's not God, then I couldn't have managed. Yeah, because I've told you again, I've been ill 1 2 days through the week, but I still tried as much as I could to show up. Yeah, and God has been faithful. Yeah, so I've always been that thankful person to that guy, and I think you should too. Yeah, and make sure you put this business onto his able hands, because anything placed on his hands, because from the book of Proverbs, let me also start preaching. But anything you establish, God will make it work out. Yeah, so long as you establish with him, everything will be fine. So I have nothing much. Let's meet on the psychology session now. Yeah, because it has been requested. And, I have to now. No, so I don't know when should we have it. Cause I told you guys that this week I'll be off charts. I have a funeral to attend back at home. Okay, so although it has not affected me directly, but the person affected was a close person, and that is the least that I can do, standing with the family as they do the send off. So I might have much distraction, so I won't be that much on chats. But a talk I can do it anywhere. I can do a talk anywhere. So really, you guys just be available between when should we have this talk? We'll have that talk. I'll arrange. Don't worry. We'll have that talk. Because I know myself. Once I'm outside my house in Nairobi, my head usually jumps. Yeah. So I don't want to arrange anything right now before I check my schedule well. But that's the activity I have next week. So I won't be that much on chats. You guys, it's the end of the quarter. That's quarter one. Take all your trades that you have since January first. Study them. Put down the statistics. Have the wins and the losses. Filter out the wins and the losses. Avoid the mistakes you did on the losses. Remain with the wins. Build a good edge trade for Q2. Okay? Take all your trades from Q1. How many trades do you have in Q1? I know there are very many, because actually I have more than 150 trades. Are they really getting to 150? Because around January I had around 40 something. No, they're not getting to 150, but they are more than 100. Yeah. So take all your trades, study them, filter out the losses from the winners. Avoid the mistakes you did on the lost trades, because we have a valid loss and we have a valid win. You can win, but the win is invalid. It was outside your trading plan. You can lose, but the loss was invalid. Yeah. So if there are valid losses, because losses have to be there. Losses are part of the game. Okay. Repeat what you did on the winners over and over again. Then you'll have good results. And make sure you remain consistent. Let me tell you something. I've been on charts every day since I started trading. Yeah. So for you to have a result, or for you to have something good, something has to be sacrificed. Okay, you have to sacrifice something for you to have results in trading. Sacrifice your sleep. Actually, I was telling you guys that when I was starting to trade, I was sleeping around 4 hours. Man, I was backtesting around 18, 16, 18 hours in a day. Yeah, that's how I really, really lowered my learning curve. I never had a mentor to point to, but I was seeing what my close friends were doing, and I said that I have to. Yeah, because if you've been following me from then, you realize this system has been the same thing. The only thing that I've done is that I've filtered out the entries. Because previously I was making entries on H1, then I came to M30, I came to M15, I came to M10, I came to M5. Then now we have even entries below M5, right? So it's the same thing that has been worked on for years. Now most of you are getting it direct. I can just hold a 5-day boot camp and the entire system, you have it on your head. This system has been built for years actually. And all trades are there. All trades have been documented for years. From the entries I had on H1. If you ask me those trades right now, I'll give you a PDF. Entries I had on M30, ask me those trades right now, I'll give you a PDF. Entries on M15, ask me right now, I'll give you a PDF. And on entries on below M5, I'll give you a PDF too. So you can see what work has been done. Yeah. And what time it took. Unlike most of us right now, we're just getting this system like in a week. Then the only thing that you need to do, that I'm insisting, backtest, practice, journal, document everything, okay? Then build your edge. Building your edge is that you take your winners, you take your losers, your lost trades, right? Check what you did, that thing you did good on the winning trades. Repeat that over and over again until it becomes an habit. Then you shall have an edge just like that. It's just simple. Yeah, so don't complicate stuff, just be disciplined and you'll have results. Yeah, if you get tired along the way, you can as well give up because we can't be telling you every day, don't give up, don't give up. Because obviously, if you don't give up, if you don't give up, you'll have to make it, right? Because you know the universe will always have a way of rewarding you, or rather, no hard work goes unpaid. That is one thing that you have to know. So you have to show up every day, do what has to be done, and be pretty sure that you'll have results. Remember, the universe will give you what you deserve, not what you want. Yes, you might want $5,000 per month, but the work you placed in, the universe will just say, I can't reward you for that, my guy. You don't deserve that. So do good work that the universe will just give you what you deserve. You just perfect your skill to an extent that even if someone sees your work, is pleased. Yeah, this skill will pay you big time. Yeah, you'll find investors that will like your work. These investors will give you a lot of money to trade. You'll make money, my friends. You know. So just put in the work, perfect on the skill, have good results. Okay. Yeah, most traders give up along the way when they're just almost. And the one thing you have to know that once trading clicks, then it's just done that way. Yeah, once it clicks, then it's done that way. Yeah, once you're a good trader, you'll die with it, right? Yeah, so I don't talk much. I don't talk much. Uh, Put in the work, you'll have results. If you have a 9 to 5 or other something you're doing, because most of us are still learning, right? Do it, create some hours for charts. Maybe when you come back later in the evening, 2 to 3 hours, do a recap of what price did the entire day, document, go to bed. One day it will pay you and take you off your work. Because I know this 9 to 5 sucks. Right now it's raining. It's raining. So you wake up early, you don't have a car, you get rained on, you get bored, you get to the your work point, you have moods, you want to beat your boss is younger than you. So many dramas in this 9 to 5. So this guy who's younger than you again determines when you're going for lunch. You are hungry by 11 a.m. This guy is telling you that you have to break for lunch at 2 p.m. So you can see all those torture. Who is ready for that? None. So put in the work, you'll see results. Personally, I'm not that. I'm okay. I studied. I did my university. Actually, I did one of the best courses because I had one of the best grades in back in high school. I'm a civil engineer by profession, but I'm not practicing that. Yeah, because who want to boss me now? I've always hated bosses since I was born. Because I'm the firstborn son from okay, in our home. So I've always hated someone bossing me. So I had to avoid it to death. I have to avoid it to death. Someone determining when you wake up, when you come back to your house, the products you use, because obviously it will be determining your salary. Eh, You see traders taking flights, going to places. You can't take that flight because that flight will cost half of your salary, or maybe will cost the entire salary. So don't allow yourself to be part of that. Okay? Don't allow yourself to be part of that. Trading, you can wake up in the morning, make an even in a month you can make an entire 2 years salary of someone. In a week you can make an entire year salary of someone. Yeah. So keep on going. Everything will just click. And make sure you involve God. If you are a Christian, involve God in all you do. Yeah, that guy will answer. And try and be righteous, because he won't answer you if you're not righteous. One thing you have to know is that we are all children of God. If I don't have Christians over here, we are all children of God. We are all children of God. And I think from the book of Matthew, chapter 7, around verse after around verse 10, 11, it talks about if your father and your son asks you for bread, will you give him a stone? You won't, right? Fathers have the best gifts for their children. So God up there is our father. He won't give you a bad gift. Just remain righteous, and he'll give you the best, right? And make sure, don't worry about anything. Don't try chasing anything, because the more you chase, the more it goes away. Yeah, just do your part. I'm insisting, do your part and do it perfectly with the discipline and consistency. Then God will do his. Okay. Yeah. So because there's this book that talks about, I think it's the same Matthew around chapter 6 verse 11. Matthew chapter 6 verse 11 talks about don't worry about tomorrow. Then it tells us about to check the flowers of the field. Just check how those flowers are beautiful. Check on the grass. The grass is always very, very green and healthy. Yet grass is something that tomorrow it's slashed, taken to the fire. Check on the birds. Do they even store anything? They don't store anything. As you're always worried, I'll eat. What will I eat tomorrow? What will I wear tomorrow? Yet you're even more worthy than these birds. You are more worthy than the flowers. Actually, the Bible says that the flowers of the fields are more dressed than Solomon could do. So you can imagine if God does that to the flowers, what about us who are more worthy than the flowers? The only problem is that we have less faith, we humans. You have something you are to do, but you have so much hesitation, so much doubts that even nothing can work out. You're really, really confusing your energies. Are you guys? I don't want to preach because I'm good in all, but make sure you do the right thing. Okay, make sure you do the right thing. Yeah, wake up, do your markups. If you're busy, if you're a busy person, you can do your markups earlier because doing markups can't even take 30 minutes. Then you go to whatever you're doing. When you come back, you do a total price recap. Check on the entries that were presented, document, or share with me in the Discord. Ask problems, blah blah. If they are valid, yeah, I will validate or invalidate. You document, we move on, you learn. Okay? Yeah, so it's just simple. You guys have no questions. You guys really, really love when God is involved. Then it gives you guys hope, and hope is not a strategy in forest. But take it from me, establish this on his able hands. He will make it happen. Okay? Yeah. So don't worry much, and make sure you always ask for what you need. Okay? Yeah. So uh, ask for more knowledge. Ask for guidance through this industry. Because remember, God, from the book of Matthew chapter 7 verse 7, it says that whoever asks gets, right? Whoever knocks, the door is opened. Whoever seeks finds. So ask. God will answer you. Ask and believe. Just have that little faith. Okay? Yeah. The problem comes in when you start doubting. Most of us don't know. When you want something so bad that you believe that will happen and you have that faith, it has to happen. God will do it